All right, what is going on? We got some things to talk about in this video. Like Ethereum is about to hit all-time highs after like 4 years. It's been a crazy ride. But before we get into the video, give the video a like. It lets me know that you enjoy it. I've been trying to pump out as much long-form content for you. So definitely before we get into it, give the video a thumbs up. So there's a few things that we're going to talk about. One, being Ethereum, touch a little bit on that. Two, Perplexity makes a bold $35.5 billion offer to buy Google Chrome, which is pretty interesting. Then we're going to talk about Micron and the recent guidance update that they gave in the upcoming quarter. Then we're going to talk about inflation. So we had the inflation report come out yesterday. We're going to touch a little bit on that. Nothing too crazy and kind of like where the economy's sitting at. And then we're going to just talk about some sectors, sector performance, and like where I think money's going to be rotating into. So, really quick, I just want to talk about Ethereum. So, if you know me, I've been in Ethereum for a pretty long time. It's been a wild ride to say the least, and we're less than $200 away from hitting all-time highs. It's been a crazy ride, absolutely crazy ride, especially if you were a holder since 2021 and you've maintained, you didn't get shaken out all the way down when we went below $1,000. And then even this last April during the tariff dip that we had, Ethereum went down to like 1,400. And I think that tariff dip scared a lot of people out, a lot of ETH holders on that dip. So if you held throughout this time, congrats to you. You deserve it. And I think this run's only getting started for Ethereum. Ethereum's just been doing its thing since it started, 10 years in the making, and the network has never went down. So really quick, I want to just go over, if you haven't been in Ethereum, if you haven't been paying attention to what's been going on, the reason on why Ethereum is pumping. Well, part of the reason, the network's great, people love it, but there's a bigger reason. So if you know Michael Saylor, he is the Bitcoin maxi. He started this Bitcoin treasury company, and he was raising money to basically just buy a ton of Bitcoin. And a lot of other companies followed suit. And there's a lot of companies that followed his lead and basically just made a company just to buy Ethereum or Bitcoin. So that's what's happening now. And there's a guy called Tom Lee. He works for Fundstrat, and he's basically the Michael Saylor of Ethereum. And he started following suit of Michael Saylor. Now, the funny thing is there's actually a company. So one of the co-founders of Ethereum, I forget his name, he started SBET SharpLink Gaming, and that is this company right here. So I think this was actually before Bitmine. So you probably seen BMNR and SBET come out, and SBET, I'm pretty sure, was the first one to do it, and then Bitmine came like right after, and they actually own more Ethereum than SharpLink Gaming. So that's kind of what's happening, is a lot of these companies are just forming to either just become a treasury company and just strictly buy Ethereum, stake it, try to make money from that, or there's just companies that are just buying Ethereum on the side and just putting it on their balance sheet. But that's what's happening and causing this ridiculous surge price in Ethereum. So right here, this is Bitmine. So this was this top company right here. They're raising, and this is while they already own 833,000 worth of Ethereum, or 833,000 Ethereum. They plan to issue $20 billion worth of stock to purchase more Ethereum. That is insane. That is an insane amount of money to put to just buy Ethereum and stack it up. I think he said that he wants to. So Tom Lee said that he wants Bitmine to own about 5%, or it might have been 10% of the entire Ethereum supply. I don't think he's joking when he said that. Like, they are seriously acquiring so much Ethereum. It's insane. So if you got shaken out all of these years, especially during that April dip, most likely your Ethereum got acquired by these bigger companies. So sucks to suck, but it is what it is. SharpLink Gaming is the second highest right now, so they almost have 600,000 Ethereum, worth a lot of money. So these are all the companies. These are all the companies that have Ethereum, and it's only getting larger. That list is only going to grow. So people want your Ethereum. If you're an Ethereum holder, hold on to it. I think you'll be pretty happy soon for what's going to happen to Ethereum. So that's kind of like what's been happening, and why Ethereum's been on this ridiculous run. There's just too much buying pressure, and yeah, it's gonna get crazy. All right, so really quick, I want to touch on Perplexity. This isn't the hottest topic, but I just thought it was interesting when I saw this. So Perplexity is a website, and this was in a few videos that I posted, but it's basically they have their own models, and it's like a ChatGPT like website, and it's been pretty popular, especially in the finance industry. A lot of people use it for finance. I use it for finance. It's a great website, but basically they made a bid to buy Google Chrome browser for 34.5 billion. I don't think Google even entertains this at all. I think Google Chrome browser is worth probably even more than 100 billion, but I think they wouldn't even entertain it unless it was like for 100 billion. So I had this stat right here. Like, Google Chrome is by far the most popular browser on the market. So here's the market share right here for browsers. They have 68% of market share. It's not even close. You look at Safari, Edge, Firefox, Samsung Internet. There's others that are sprinkled in there. I know like Brave is one of them, but it's not even close. Google Chrome owns the internet. So I don't think Google is going to get rid of that unless they literally have to. I think there's like antitrust lawsuits that are going against them to try to break their part of the segment, other businesses up. But yeah, I don't think they entertain it. But I did see rumors that Apple was apparently looking at Perplexity to buy them out to kind of help them with this AI race. And I don't think that's true because, well, I don't think Perplexity would be willing to sell their business if they're trying to make bids to buy Google Chrome's browser, the Google Chrome browser. And I think earlier this year, if I'm not mistaken, Perplexity made a bid to buy out TikTok US earlier in the year. So maybe Apple's interested in buying them out, maybe for the right price. But I just don't think Perplexity is willing to sell their business if they're looking to acquire, making bids to acquire these, all these, Google Chrome browser and TikTok US. So that's just my opinion, but I just thought it was pretty interesting because, obviously $34.5 billion is a lot of money, but no way Google entertains it. All right, so Micron. I made a post on my Instagram account. Well, I put out a story that I started trimming my Micron position. So it was up 61%. And yeah, I just decided to start trimming and just take some profits off the table and just let the rest run. So Micron is a great company. I think they're going to do very well over the next couple of years to capture this AI growth. The HBM market is really starting to heat up. So the reason why Micron's price started to kind of go up a lot this past week is because they updated their guidance for fourth quarter fiscal 2025. So here's their guidance. Previous guidance right here, revenue was 10.7 billion, and that went up to 11.2. Gross margin, they also increased that from 41% to 43.5%. And then earnings per share, $2.29 is up to $2.64. Great to see for Micron shareholders. That is why the stock started to kind of pop this week, and it's doing very, very well. So Micron right now is in a very strong position, and to my knowledge, Micron is there's three memory providers that are, there's more than that, but the three that really own the market is SK Hynix, Samsung, and Micron. To my knowledge, Micron is the only US listed memory stock that, if you're New York Stock Exchange, NASDAQ, whatever it is, I forget the exchange that they're on, but if you are in the US, your exposure to memory is through Micron. And there may be a little smaller companies, but to my knowledge, it's only Micron. To get SK Hynix, I believe they're a Korean company, so you need to be on the Korean exchange. And then Samsung is Japanese, I forget, one of those. But Micron is in a very strong position. Now, here's also the thing. Here's also the thing. About a month ago, I don't even think it was a month ago, there were analysts that said the HBM supply in 2026 is going to finally outpace the demand. So Micron said, wait a minute, I don't know about that. So Micron's HBM sold out for all of 2025. And now they're hinting that 2026 is potentially going to be sold out as well. Now, the leader in this market is SK Hynix. They own the majority of market share. They haven't said anything. Either way, I don't. If Micron's saying, "Hey, we're selling out in 2026," then obviously I'm not. I'm not worried about what SK Hynix has to say. I'm worried about Micron, especially if I'm a shareholder. Right? That's great news. So that is also a big reason on why Micron started to pop. So their HBM3E and their HBM4. So right here, the shipments will primarily feature their HBM3E alongside HBM4. HBM4 is their next generation of HBM. There's still some work that needs to be done with that. That'll come in like the second half of 2026 into 2027 pretty heavily, as long as these companies start ramping up and want to go with HBM4. But very good sign for Micron. Now, why I sold some of my Micron position, the majority of it. Listen, I was up 61%. I spoke about it in my last video, but it doesn't hurt to take some profits off the table. I was I was happy with the gains, and I'll just let the rest ride out. If it goes up 100%, 150%, 200%, then maybe I'll start trimming some more profits. But I just wanted to take some profits, build up the cash position, and and maybe preserve some cash for a potential dip, especially because September is a weak seasonality month out of the year. But either way, I'm still invested in it, still have a position, but I just definitely wanted to take some profits. If you're in Micron and you're holding 1, 2, 3 years, I think you're going to do well and you won't be disappointed. But that is why I sold some of my Micron position. And if you know, 444 was doing a lot of buying during that tariff dip. Shout out to Chris for putting the group onto that. But a lot of people ate off Micron. A lot of people. All right, so I went over this in my last, I think it was the last video, but where we're at for, well, actually, hold on, let me go over inflation. So inflation report came out yesterday, CPI year over year. We actually came in under expectations. The expectation was 2.8%, and we came in at 2.7, which is, caught a lot of people off guard. I think a lot of people were expecting inflation to actually come in more at like 2.9. Some even had it coming in at 3%. So again, market didn't expect it, and that's also why the market's starting to go on a little run this week. But really, it's the CPI and then PPI this week, so there wasn't too much to look forward to besides CPI. But CPI came in lighter. Now, with that, I went over this in the last video. There's a 99.9% chance that we get a cut in September. So this was sitting at like 89% last week, and now we had CPI come out, and now this shot up to 100%. So this looks like we're guaranteed to get a rate cut in September. October also shot up to 70.5%. So that's back-to-back rates cuts that we're probably going to get. We're off November, and then December, pretty sure this went up. I think this was lower than 58.7. So good chance we're going to be under 4% this year for the Fed funds rate, which is crazy going into 2026. So just, I already spoke about this in the last video, but you know how the market can get when interest rates get low. So I just wanted to cover that real quick. And then this is also what's in the inflation report. So some things have obviously gone up, but I think where we're at right now in the economy, from what I've noticed over the past year, inflation hasn't been really crazy. Now there's a couple things that went up, like the electricity bill. I mean, this literally actually says electricity inflation. Electricity, but like the bills for that have definitely gone up. And then there's like insurance, that like car insurance, that has gone up like crazy. But other than that, I didn't really see like or haven't noticed too many things kind of going up like crazy, like we were like back in 22 and 2023. So I think like where the economy sits, we're doing all right. I did see something though. There's a lot of analysts and a lot of economists that are saying 3% is like the new inflation rate that our country has to be comfortable with. I don't know if that's true. I'm not really into economics like that. I'm not going to get too much into that. Um, but that's why a lot of people think 2% isn't going to be that's the old norm. The new norm is going to be 3%. That's like our new like inflation rate compared to how it was like, 2% 5, 10 years ago, 15 years ago, which is interesting. But either way, if it's 3%, 2%, I don't think that's a huge difference. Either way, the stock market's going to keep churning and it's still going to grow. So at the end of the day, just don't let that slip your mind. All right. Lastly, I just wanted to hit on sector performance. So last year, at the end of last year, I talked about looking at basic materials in the healthcare sector. Healthcare is still doing poor, and then basic materials is the best performing sector. So at each half of the year and then at the end of the year, I always look at this and I want to see what are the best performing sectors half year and at the end of the year, just to see where the money potentially is going to start rotating to. So a lot of these funds, what they do is they start to just rotate their money into other sectors. So I've seen this play out many, many times. Every single year I've been paying attention to this. Basic materials was the worst performing sector. I think it was bottom 2 last year. Now it's the best performing. So was healthcare. Now, really quick, where is it? Right here. So on the right side here, you can see healthcare since COVID has been awful. So for the last 5 years, you would have had almost negative 16% return since 2020. And obviously, Pfizer, Moderna, all those big healthcare companies benefited off of it. And then they've just come down like crazy. You could check the stock price of like Moderna. They've gotten absolutely smoked since 2021. So that's a big reason why. There's still some opportunity in the healthcare sector if you're in 444. You already know what I'm talking about. But there's going to be some opportunity. There's always good companies everywhere. You just have to be willing to find them and look at the valuations that are low. So healthcare just hasn't been a good performer, but you start to see this rotation that happens. And real estate, I'm a little surprised because real estate, I still think there's some opportunity there, and that's going to be a good performing sector next year. But either way, you're going to see technology, energy, consumer defensive, industrial, financials. You'll start to see, like basic materials may end up going up 20% this year. Then next year, it won't do as well. Maybe we'll do like 5%. Next year, you may see healthcare be a top performing sector year to date. Consumer cyclical. So that's all these funds do is that they take this money and they start cutting positions that are in the best performing sectors, take some profits, and then start to rotate in underperforming sectors. And then it's just a cycle. And you clearly see that because I've been watching this every single year. Energy was a big one. If you look at how I remember 2022, energy finished like up 20% for the year, while the S&P was finished like negative 23%. And the next year, right after that, energy was like one of the worst performers. So it's a real thing. And sector rotation, you have to pay attention to it. And it's how you see where money's starting to flow into. I think right now, so I want to show you this. The top 10 stocks right now account for 40% of the S&P. Absolutely insane. This is the highest concentrated market that we've ever been in. So back in like, I think it was the 60s, maybe even the 50s or 70s, railroad stocks were like the hot stocks to own back then. The market was super concentrated. So actually, I think it's right here. Yeah, so the 70s. I think it was the 60s and 70s. That's what that, actually, that's probably tech. I think this is just tech. Yeah, this is just tech. But railroad stocks were like the highest concentrated stocks in the S&P 500, and then that started to collapse. Now, again, It's completely different. Tech is making a lot of money. You look at the dot-com bubble versus now, these companies are actually making profits, so it's not really a comparison. But still, when the stock market is this concentrated, top 10 stocks make up for almost half of the entire S&P. I think we're going to start seeing some profits being taken from these companies and being rotated in to the undervalued stocks. So there's some retail stocks. Nike, I think, is one. I know Lululemon. I haven't really dove into them lately, but they're getting beat up. You have the healthcare stocks. The healthcare industry has a lot of opportunity right now. You're going to see some stocks that are going to, a lot of these funds are going to take profits and start rolling them in. So just pay attention to that. But I think that's what's happening. And even during the tariff dip back in April, it wasn't as bad as people thought. Now, I know we went down 20%. It was crazy. But the stocks that were really getting hit were the big tech stocks. And it was because it was concentrated so much. That's why it looked like it was going down so much, because there were other stocks in there that weren't getting hit as bad as those big tech stocks. So it made the S&P look worse than it really was. But that's kind of what's going on. So like if you have these 10 stocks that go down 20%, 30%, the S&P is going to go down a lot, right? And that's just because it's so concentrated right now. There's always going to be opportunity out there, but just my kind of analysis of just what I think is going to happen, a lot of money is going to get taken off the table out of these stocks, and they're going to start being rotated into a lot of undervalued stocks. But that's just what I think. So that's all I have. I wanted to give an update on kind of my Micron position. I had some people ask me why I cut it, but that's kind of like the whole idea around that. So like I said in the beginning, if you enjoyed this video, give me a thumbs up, and I'll see you in the next video.